Good morning, traders. It is Monday, March 2nd. We are about 2 hours into trading, 2 hours and 15 minutes to be exact. Market looks pretty decent today. Here's what's going on. We've got this nice little compression right in here, and the market checks the bid after gapping higher. We start to see a mix of green and red candles. As I told my members in the chat room, I said, look, this to me is bullish because the market's been able to hold off any kind of major selling. We are not dropping to check the low from Friday. So even though these candles are mixed, even though we're trending a little bit lower here on the open, we are not seeing a free fall. I think there are buyers. And as soon as the market comes in, long green candle erasing that red bar. Market comes in, long green candle. That's an engulfing pattern right there. We break through this downward sloping trend line on a 5-minute basis. Boom, long green candle through to a new high of the day. So now the type of pattern that we're seeing is a small pullback upward sloping channel. So that pattern is likely to exist. The longer this rally lasts, the more likely it is to culminate with some really long green bars closing on their high, a series of them. And the reason for that is that buyers will get more and more aggressive. Let's go into that daily chart and take a look at what's going on and where our major resistance levels are right now. The market is kind of pausing right now, and that's why I'm willing to record the video early in the day. You can see this waterfall event that we had on the SPY. And you can see how Friday we had this bounce off the low and we closed on the high. There was a lot of fun buying that came in late Friday. They had to reallocate because stocks had fallen dramatically, bonds had rallied dramatically. That really threw all of their portfolios out of kilter, and they have certain percentages that they need to allocate in each. So they needed to sell some bonds, buy some stocks. That forced a 70-point rally on Friday. We also have beginning of the month, end of month fund buying coming in. I felt that would be support. When you have a big sell-off like this, asset managers are hedging all the way down. They're either buying puts or they're selling S&P 500 futures. Well, they have an expectation of how much of a hedge they need to have on and where they would be willing buyers again. Well, we fell so far so fast that many of them are probably thinking, I think we've shouldered the brunt of this move. It was a big surprise event, and I would be a net buyer here. So what do? They start lifting some of their hedges off, and that has a bullish impact on the market. Plus, you're going to have some profit taking on shorts that had that type of a gain. So they're also in the marketplace right now. Everybody's just trying to make sure that the lows are in. They don't want to stick their head in a noose. And we've got these major moving averages that are going to come into play. If you watch my video that I recorded Sunday night, you know that I'm looking for a market move up to the 200-day moving average this week. And I think we could see it in the next couple of days or so. We may even see it today. Then we spend some time around that 200-day moving average, and we'll see what happens next. It's going to be dependent upon coronavirus. So big panic selling. We saw 200 new cases of coronavirus in China over the weekend. That is down dramatically. So the growth rate of the new virus is slowing. We have Apple is starting to reopen its stores, Starbucks starting to reopen its stores in China. So, yes, the coronavirus is spreading globally, but we're already seeing after 2 months that China is getting back on its feet. Let's go into that daily chart and I'll show you what I'm expecting today. Tails under body, long green candle, able to hold all those gains. The little bit of selling that we saw in here, boom, came right back. Boom, came right back. We're starting to make a new high. Let's put that 1OP indicator up because it's telling me right now that prices are going to go higher. This is the only indicator I use to trade the S&P 500 futures. So here's why it's saying we're going higher. You can see here how the market has been inching its way higher. What's the 1OP indicator done? It's been moving lower. This is what I call a bullish divergence. Very powerful, and it means that the next cross, which we're getting right here, is going to be a nice move higher. We are through the high of the day from Friday. We have filled the gap in from Friday. That opening gap has been filled. We're through the high of the day. This move is starting to gain momentum. I think you should be long. Today, we've done a number of different trades. I'm going to go into the chart. Let's take a look at some stocks that I think will perform well. V is one of them. We had this nice gap up higher, and we had relative strength in the stock showing early this morning. See that orange line above zero? That's my relative strength indicator. When I saw this, I knew that I wanted to sell some out of the money bullish put spreads on V. So I sold the March 6th, and I'm focusing on March 6th expiration because that's only 5 days away. My forecast is for the market to find its footing and to move sideways this week, and there's a chance for a bounce as well. I think that a lot of the heavy selling is out of the way for this week. I'm not saying that we're bullish. I'm not going gangbuster bullish saying this is it, buy, 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 throw everything you have at it. I think we're going to rally. I think we're going to try and grind back some of these losses that we've made, but then there should be a second wave of selling that comes. So for this week, that's all I'm focused on in this uncertainty is I think the market gets back to the 200-day moving average at least, and it spends a little bit of time there. That's great for selling out of the money bullish put spreads because those option premiums will collapse, and I'm selling them below technical support on these stocks. So here's an example. V, I think you can buy today. I really, really like this price action. So I see this long tails under body right here, relative strength, and I sold the 180, 177.50 bullish put spread for 50 cents. So I'm putting up $2 in margin to make 50 cents. If this works out for me, that'll be a 25% return. Really like that trade. Here's the other kicker for V. It's through the 100-day moving average. This is a beautiful capitulation low here where you've got major selling. It tanks below the 200-day moving average on Friday. It rallies all the way back up to that 200-day moving average, closes on its high of the day. Today you get a gap higher. Love all this and through the 100-day moving average. Very consistent company, not any credit risk. They make their money on transactions. Love it. Really love this stock. So think it could do really well this week. That's one that I would suggest being long. You know that I like Amazon. That bullish put spread from last week is doing really well. Did I just say Amazon? Well, I do like that. Microsoft is the stock that I wanted to focus on first. Similar situation. Trades below that 100-day moving average, closes near its high, up this morning. Good relative strength out of the gate. I bought this stock early in the day, had to take a little bit of heat on it while the market was checking to bid, and now it is off to the races. You know I like Microsoft. Twitter was one that we had on our bullish put spreads from last week. Had great news. Boom. Stock is higher through the high of the day. Twitter looks like it has a chance to go. They had some news. There you can see it's struggling with that 200-day moving average. So I would avoid Twitter until it can get through that 200-day moving average. CVS, trying to get a bullish put spread off on this one. Hoping for a little bit of a pullback. Love the strength. I think CVS is one that you're going to be able to trade from the long side. It should do well if there's coronavirus. People will need to go and get medicine, even if it's just cold medicine or breathing masks, whatever it is. I think this stock is going to do well. We go into that daily chart, we see that big sell off, and we have a close on the high, a gap higher. We take out the open from Thursday. Stock is on its high right now. It looks likely to challenge that 200-day moving average. I have been trying to sell a bullish put spread down here using the $58 strike price, which was the low today, and the $58.50. I think I'm trying to sell the 58.50 bullish put spread for a dime. That would yield a 25% return as well. I have not been able to get filled on that. Walmart was one that I saw early today. Traded that. Look at that. That is a huge move up through the 200-day moving average right now. It's got news. It's going to be automating many of its stores. Really powerful move today. Walmart looks really good. It is a choppy stock, and after a big move like that, I don't know how much more gas it has in the tank. We have a lot of traders who got on this. We had a bullish explosion alert on it, and it's also been on a lot of our searches. KPTI, that was all over our searches this morning. Look at that relative strength right in here as the market was pulling back. The stock gapped higher. It held all of those gains, had a breakout through this downward sloping trend line. Goodbye. Really big gain. From the 24.75 level, it rallied 3 So a lot of money being made on that stock today in the chat room. Amazon, I showed this in my video last night. I like Amazon, and this morning I saw the stock pulling back. I said, I've got to be true to my video last night. If I had a chance to sell that 1800 1795 bullish put spread way down here for $1, that means that I'm putting up $4, $5 in the strike price, less the $1 credit I receive. I have to put up $4 in margin for that trade. I'm bringing in $1. That's a 25% return I'm going to generate if this spread expires worthless Friday. And I'm leaning on that low of the day. That's what bullish explosion alerts look like down in the lower left-hand corner here. I'm going to ignore it because we've already been looking at that one. That tells us that there's extremely heavy volume. I have so many data points that I collect. I collect tick data on every stock. I can tell you if there is a volume spike on a stock in the last 5 minutes because I know the average 20-day volume for every stock for every single 5-minute increment of every day. When I see really, really high volume, we get these explosion alerts. Oftentimes, the news hasn't even hit the wires, and we know that there's something going on in it. So we look for these big names, big breakouts through horizontal resistance, big breakouts through major moving averages. We may only get about 6 to 8 of those a year, but they will more than pay for all the services that I offer for a year, each one of them. So we don't do a lot. This is not a core trading strategy for us, but when we get those alerts, man, are they good. So JD, another stock that's been on our radar since very early this morning. They posted earnings. Big gap, good relative strength. Look at that relative strength all the way through. This is coming up on our searches. Relative strength 30. These are stocks right now that are showing great relative strength. Let's take a look at a couple of them. Look at that relative strength in Cigna. You got the market moving higher. You got this stock without any kind of pullback. You've got a long, nice upward sloping trend line right here that you can lean on for your stop. Cigna, see how easy that is to find? It's got to be easy. We're day trading. We're in, we're out. We're trying to find where the momentum and where the strength is. So even if the market pulled back, a stock like this would still hold its own. We could watch the market come in, reevaluate and go, yeah, the market doesn't look too good here. I should get out of this stock. The stock will be holding its own or moving higher. That buys us precious, precious time to evaluate. If I'm trading the S&P 500 futures and I get the market wrong, I will lose money. If I pick my stocks well and they have relative strength and I get on the wrong side of the market, that precious time will allow me to get out of the trade, not have my head handed to me. Oftentimes, I can even make money on it. Now, the beauty of it is when I get the market right and I get the stock right, whoa, these are the ones that shoot higher. So that's what we look for. I've given you a lot of stocks to look at. I like Amazon. I like Microsoft. I like Twitter. I like CVS. Walmart looks good. Buy dips on that. That's a choppy stock. Visa, love it. KPTI has been super hot. JD looks really good today. Those are the trades that I like. And let's go back to the market, and I'll tell you how I see things shaping up here. This is getting to be a very, very, very nice, tight, steady trading channel right now. And what will happen is that as this continues to go up and there's no selling, every time sellers come in, gobble, 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 they buy up, buy up, buy up. The market can never get any kind of dip going because buyers are continually raising their bids, raising their bids, raising their bids. What eventually will happen today, and this is where we have to be careful of a buying climax just today, is that eventually you'll start to see long green candles stack one on top of the other, and that will be a blow off buying climax, and it'll take us up through the upper end of a trading channel like this, and it'll go parabolic. That's when you could see some profit taking. That's when you have to be a little bit careful in this market, and that's when you should exit your bullish long positions. But as long as this trend stays nice and compact, you can follow it higher, higher, higher all day. Try and stay with your positions as long as possible. Know that the 200-day moving average on the SPY is a likely magnet maybe even today. We could get there today. If we get there today, that'll be a very strong showing. That'll be our next support level. We could even try and challenge that 100-day moving average sometime this week. So we had a decent ISM manufacturing number come out today, but really didn't mean a whole lot to the market. Right now, it's all about an oversold condition, and it's about coronavirus. So trade well. I think you're going to have a really, really nice market tailwind today. So buy, use an upward sloping trend line as your stop on any one of these stocks. Use that trend line on the S&P 500 as your gauge. As long as it's intact, you can stay long. There's your upward sloping trend line. You can also draw one right like this. It'll be a little bit steeper, a little bit more passive for you to use. But stay long. We're going higher. Sell bullish put spreads. Even better than being long stock because you're giving yourself a lot of distance from the action. If we happen to get an overnight pullback in the market, you should still be fine because tick, 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 time decay is working in our favor. Option implied volatilities are dropping. Those are two very, very powerful influences. If you like this content, please give this video a thumbs up. Make sure to subscribe to my YouTube channel and turn on your notifications. That way you'll never miss one of these videos. Promise you, every one is going to have some great trading ideas in it and lots of education. Thanks for watching. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.